Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for March 1st, 2023, getting on towards, about 10 minutes to 7. I want to remind you that tomorrow we're having the live webinar. I will be opening at 12:15 p.m. If you haven't received an invite, too late. I'm not sending them out anymore. The only way you'll be able to join is clicking up here in these videos right now. And in that, you'll see an icon. Fill out the icon, and you'll be sent your user ID and your password. If you have questions on stocks, spiders, whatever else, you can either on futures ask them. You can ask them as we're doing the futures lineup. But if you want to do them on stocks and so on, I'd really prefer you write them to me. I don't know which ones you're going to ask, and there's thousands of them. There's only about 40 some odd futures we cover, right? Okay. So let's take a look and see just what we have here as we come into the markets. I have been looking for a break in the stock market. We've had it. I've been looking for the gold to move up. We've gotten some of that. For gasoline to start forming a base to move higher, we're getting that. Interest rates to fall, we're getting it. Today I was looking at what's going on the Fed Watch page, and some of the swaps are now saying that come September, we might be at a 5.5% interest for a peak. So they keep extending this out. And if they do, the idea that you're going to have the naysayers, hey, we're going to pivot this year, ain't going to happen. The Fed will give wherever the peak comes from, at minimum, a quarter to see what happens. Minimum. Could be longer. They're not going to give 1 month, we peaked and now we can go the other way, unless the bottom of the economy were falling out, and then they've got to go into a complete other motion. Do you think that's going to happen? No, it isn't going to happen. All right, so now we start getting the employment numbers. Every week we do, but you're at the beginning of the year. So next week, I think we'll probably get the jobs data. We'll get JOLTS data. Tomorrow we're going to get the unemployment claims. You got to start paying attention. This is the typical progress you get. And what month is March? It's the FOMC meeting month. Keep that in the back of your mind. What else do you have to keep in mind? China. China's going to have their National Party Congress next week. So what are they going to do? Well, they see the weakness in the United States and in the European Union, all of Europe, as they're fighting inflation. So I don't think they can look on us to just be that engine just keeps wanting to buy like mad. Our central banks are going to try to shut down our economies even further. So look for them to look inward, much more so than normal. But if COVID is done, and they claim, China claims it is done, past, over, they've peaked out, then their economy should pick up, and you'll see gasoline, crude oil, platinum, palladium, copper, other markets pick up. When we take a look at the S&P, do you disagree that all of a sudden we have fallen back to the 18-day average and holding it? We're not down a lot right now. We're down for the whole week, a third of a point. The market has gotten to this inflection point. It has to decide, is it bullish or bearish from here? It's neutral as can be on that chart. You've been in a downtrend. You had sideways action, and you've broken to the downside. The trend has certainly been down. You've had a pattern of lower highs, lower lows, kick in from mid-February right through now. But you're at support. You're at the combination of the 200-day average and the 100. That's big-time support. To just go through that on an upside, if they were waiting for you up there, or on a downside, no, you'd normally fight a battle at those. Remember, a 200-day moving average of closes is almost 1 year of trade. So that is an important number that you're looking at. Combine it with the Bollinger Band. I can make an argument that you've been bearish. You've hit a target where people want to cover shorts, and that's what's going on. And you're oversold without an embedded reading. If you were sitting next to me, I'd give you that elbow in the side and say, it's a great place to cover your shorts. Let's see if we embed, then we'll get aggressive again. Remember how you embed. You don't remember it. Take the Enhanced Bollinger Band course, iraepstein.com. It's right in the word education. You'll have it. In the micro mini NASDAQ, again, you're fighting at the 200-day average. You didn't make it to the 100. You did make it to the Bollinger Band. That's your battleground. All right? Is the market in a downtrend? It is. Is it oversold? It is. Is it embedded? It's not. Mini Dow, same thing. Look where you're at. Today, you made it to the 200-day average. It took a long time to get down there, but it got there. So you're at the zone. Are you going to embed? Well, let's just see. With tonight's action, you can't count today. You can count today at the close of business tomorrow. We don't know what today's going to offer. We're at Thursday night trade, so you got to go to Tuesday's trade. Both numbers under 20. Both under 20 the day before, and both under 20 the day before. Therefore, you're getting a bounce tonight. Guess who's going to sell it? Da-da, da-da. Ira Epstein will be telling clients, I'll be putting out numbers tonight, an idea of where they might want to give it a pop to see what happens. That's what my subscribers will see from me. In the March Micro Mini, down. Didn't hit any of those averages. This is the strongest of the indices. It's the only one that didn't hit it. So it's telling me if I had to pick one to go short, I'm picking the Dow. And the last one I'm picking is the Russell because it's not as weak as the others. So you're always looking for a hierarchy within stock indices because they represent different parts of the segment of what the market, the stock market is. Be very careful here. You're on the verge of a bear market crossover, where the 18 is just getting ready to get under the 100-day average. You're embedded. Bears have total control of this market. Same thing in the 5-year. You had your crossover. Look at how you've made new lows since then. In the dollar index, you went up to the upper Bollinger Band and bing, rang the bell. Goodbye. Come out of the trade. At least half of it. And tonight, what's happening? We are losing under a 79 reading. Now, where did the market finish the day out, though, today? And this is where you were on Tuesday. This is where you're at right now. Are you going to lose the embedded reading? For sure, you have lost it. Past tense. Do I think, remember, it's not open yet tonight. This is still, the hour isn't 7 o'clock. It'll open a little later in the evening. Watch out. You've lost it. The odds are you're going to get to 103.92. I know it's only 13 to 20 points away from where the market's going to be. It doesn't matter. That's what it's doing. And you lost the bearish embedded reading in the euro, which carries to the 18-day average. Again, this is stuff you see. Now, you're going to say, but it did it all at once. Yeah, today, this time. Most of the time, it doesn't. You get plenty of time. It's like a delayed reaction. If it happens the same day, so what? Same concept. In the British pound, I have no idea what to do with this. Momentum-wise in the market, you're oversold. One of the readings is under 30, so that to me is oversold. The trend is down and you're getting sideways action. I read where the bank governors are discussing now another 50-point hike. They don't want to go there, but inflation is hot. What do? The economy is weak. I don't know if you're watching what's happening in housing in London. It's absolutely a disaster. Mortgage rates for them are very high. It's a problem. I was writing about it in my full research report today. In Bitcoin, sideways action, just flipping back and forth right here at the 18-day average. Trend is what? Well, it's down, but it's back over this number. I told my traders, let's call it a day in Ethereum. It's a chart that did say come out. Bitcoin's fighting that. Brent versus WTI doesn't give up. The highest it's recently been is 677 in December. You're 30 points away. That's not far away. When you look at the chart action, you're void of trend. You have a lower low, higher high, just sort of drifting. Same thing through here in the WTI. Gasoline out of the downtrend, but not in an uptrend just yet. And that gas has gone from basically the lower Bollinger Band. Once it crossed and lost all its reading, actually the embedded reading was lost here. Remember what I said? You'll get a delayed reaction right on through it. That was the reaction that the market finally had. We'll talk about this and a heck of a lot more tomorrow. If you join me in the live webinar, if you don't have your access yet, just click up here, 12:15 p.m. Central Time. I'll open it. Starts at 12:30, ends at 12:50. See you tomorrow.